Marking its debut on the stock exchanges today is Ceigall India Limited. The company is an infrastructure construction company undertaking specialized structural work which includes elevated roads, flyovers, bridges and more. Now the company came out with a total issue size of 1,250 crore which included a fresh issue of about 684 crore and an offer for sale of 568 crore. But to discuss more, to understand the outlook going forward, we are joined in by Mr. Ramneek Sehgal, the MD, and Bhagat Singh, the Group CFO. Hello and welcome to the show. Congratulations on your listing day today.
Thank you so much for having us over. Good morning, everyone.
Good morning. Thank you.
Good morning. So my first question to you is, now that the listing is done, what is the road ahead post the listing scenario? What are the key 3 strategies that you would like to highlight for the year going forward and for the near term as well?
So, today we think it's Ceigall 2.0, the start of the journey of Ceigall 2.0. And we've been working hard. It's not a 1 or 2 year old story. It's been 22 years this company has started. And now I feel like we compete with ourselves. We don't compete with other peers in the market. So for us, the journey still started, after the IPO. And going forward, we have 3 V's in our company as a strategy: value engineering at the time of pre-bidding, after bidding, and value engineering at the time of the financial engineering. So we're really looking forward to the new journey. And sky is the limit for a company like us. And we are very young as a company, a young organization. So for us, we have so many verticals, so many, geography-wise, we are already in 13 states. So you clearly said before, we do everything what comes on road, be it expressway, highway, elevated roads, metros, be it railway line, be it expressways, be it runways, and beyond that, we do tunneling also. So, besides this, we do utility shifting also, water, sewerage, water treatment plant, sewage treatment plant. So, sky is the limit for us. I can just say this. Thank you.
Absolutely. Sky is the limit going forward over here. Now, coming to you, Mr. Singh. Now, we have noticed that the margins in this year were about 17%, while you've showcased a 46% of a revenue growth for the fiscal. I want to understand what's the road ahead in terms of margins. Are we going to sustain it at a similar level? And again, what is the level of revenue growth that you expect going forward?
Okay, now, ma'am, the order book of a Ceigall as we speak is 9,400 crores. So this order book has been based on the basis of the healthy margins which have been configured at the time of a bidding. So we perceived that the Ceigall, on the basis of its value engineering process and on the basis of its competitive ecosystem, right from the bidding till the achievement of the COD. So we did a lot of value engineering, and on that basis we are able to achieve a double-digit EBITDA margin and also able to convert the EBITDA margins into the successful single-digit PAT. We are expecting that the company, on the basis of its strategy, would be able to maintain the profitability going forward, subject to the market conditions.
And about the revenue growth, if that can be quantified?
As far as the revenue growth is concerned, so company considering the present execution capacity and also the healthy order book, company feels that the company is able to maintain the growth rate which the company has already achieved in the past years.
That's fair enough. Now, Mr. Sehgal, you have an order book, as Mr. Singh mentioned, of over 9,400 crore, a book-to-bill ratio of over 3x. Are we expected to sustain our book-to-bill ratio in a similar range? And where are we seeing more of these orders coming for? What is the type of order inflow that we should be looking out for in the near term as we go forward?
So, we don't have a pressure of our order book value at all. As he clearly said, 9,400 crores. So we have already quoted project worth 16,000 crore. And, we have so many verticals. It's not necessary that we have to bid and get a expressway work. We can bid into structure work. We can bid into airports. We can bid into railways, metros, then tunneling, water, sewage, treatment plants. So, we have so many verticals, and geography-wise, as I said, we've already touched upon 13 states. So for us, order book value has never been a challenge. And we don't have any pressure of getting that order book value also, because, we have great bidding capacities. We have spare BGs and bid securities worth 800 crores. So if you see, we can bid up to $10 billion. So for us, I mean, I've been repeating the word again and again, sky's the limit. So order book value has never been a challenge for Ceigall. Thank you.
A 10 billion order book, that seems significant. Now, but I want to understand, what is the competition scenario usually like in the industry that you operate in? And again, what is your success ratio in terms of conversion from the bid order book that you mentioned to actual orders flowing in?
So, we never believe in rat race. So if there is a competition in road business, we might not, go aggressive. We don't have to. We just have to plan and bid according to our 2-digit EBITDA levels, which we always have been doing it. We don't get work in road, doesn't matter. We'll get it in structure. Don't get structure, we have railway, we have tunnel, we have metros. So we have so many lines all together in verticals. And as I said before, geography-wise, if I don't get work in Punjab, I'll take it in Jharkhand, not in Jharkhand, Bihar, not in Bihar, Odisha. So many states are there. So I don't see any challenge going forward. And competition, we don't feel we are in a rat race of doing, and going aggressive for any bid.
That's fair to us understand. Now, Mr. Singh, I want to understand about the borrowings scenario going forward. Of the fresh issues, you're going to be utilizing 413 crore to repay the current borrowings. Total borrowings as of now stand at about 1,259 crore. And if you are to look at the debt to equity range, that is at about 1.17x. So now with the repayment of the borrowings that we are going to be making, what is the debt to equity ratio that we should be looking out for? And again, as we go forward, what is the sustainable range for this debt to equity? Should it be below the 1x range?
Okay, thank you. Very good questions. So I will just give you an elaborative answer to this query. So the first point is, as you mentioned, the total debt to the Ceigall parent India company, which is coming for an IPO, is 1,250 crores, out of which 649 crores is the bank guarantee limits, which the company is enjoying from the banks for the purpose of giving performance bank guarantee and a bid security to the authority, that is NHAI. So that is a part of a regular availment from the bank. So in fact, it is not directly a liability. It is a running limit. Once the projects are completed, the bank guarantees are returned from the authority and we submit it to the banks for cancellation of the BG limit. So precisely against 1,250 crores, the funded debt of the company is 650 crores. Out of 650 crores, the company is paying 413 crores to the bank, and that post the IPO proceeds, the total funded liability of the Ceigall India Limited would be reduced by 62%. I repeat, 62%. This is first part. Number two, ma'am, as you mentioned, the debt equity ratio of the consolidated group is 1.17. That was what mentioned in the RHP. If you see the parent debt to equity ratio would be close to 0.60, and we are expecting that post the repayment of the debt liability, the likely number would be comparatively within the range of 0.40 to 0.60. Going forward, since the company is having healthy internal accruals, consistent internal accruals, and that too, both these internal accruals are flowing from the healthy order books, which has been bidded on the basis of healthy beta margins. So we expect that coming forward, the company will be able to maintain the debt level within the time range as what the company is having post-listing.
And I just want to add one thing. If you see across the country, our debt equity ratio would be one of the best and the finest in the country.
So a 0.4 to 0.6x of range that we should be looking out for forward. Well, that was my final question. Thank you so much for joining into NDTV Profit and sharing your insights on the future outlook of the company. All the best for future endeavors, and we look forward to having more conversations.
Thank you.
Thank you so much. Thank you so much.
Thank you for your wishes. Thank you.
So
Thank you.
Thank you.